This small cap fund has been amongst the top 3 funds in terms of returns across 1, 3 and 5 years in India. In the last 1 year alone, the small cap index returned minus 0.02%. The average small cap mutual fund did about 0.86%. But this fund delivered double-digit returns of 10.36% when everyone else was struggling. How did they pull it off? And more importantly, should this fund be a part of your investment portfolio? Today, I am putting the Bandhan Small Cap Mutual Fund through my Flash framework, a method that you can use to analyze any mutual fund in less than 5 minutes. Hello everyone, I am Udayan Adhye and I have been licensed in Indian financial services since 2015. And so far, I have helped over 2,000 families make better financial decisions. And here on my YouTube channel, I talk about all things money and personal development. If you want to apply what I share here on YouTube to your own life and investing, check out my program, The Complete Guide to Mutual Fund Investing. It has all my years of experience of being licensed in Indian financial services since 2015. In it, I've covered topics like how you can select mutual funds to invest in, how to build your mutual fund portfolio, a much deeper dive than this particular video, what is an SWP and how to plan for your various goals, among other topics as well. The guide also has Excel tools like this one where you just enter the goal that you have, the money that you require for it, and it automatically tells you, factoring in inflation, how much you need to invest per month from now onwards and which mutual funds to go for to save for that goal. Once you sign up for the guide, you'll also be part of our monthly live Q&A sessions where I answer all your doubts. To check out the program, go to the first link in the description and the pinned comment. So let's start with the F in the Flash framework, where F stands for fundamentals. And the first question you should ask yourself before selecting any fund is very simple. Can you trust the people managing it? So Bandhan AMC might not have the brand recognition that an HDFC or ICICI Prudential has, so you might not know about it right away. That's why let's check the fundamentals, and for that, as always, we will use AI. So I'm on Perplexity right now. I have the pro version, but this is entirely available for the free version as well. And I'm pasting this exact prompt. It's available to you for free in the description, so feel free to use it. All you have to do when you're analyzing any fund that you want is basically just put in the name of that fund right at the end, right? So when you press enter, it will take about 30 seconds to a minute. I already have the result that has been generated. So here we go, right? It gives you a quick snapshot analysis. It says AMC credibility, large reputable AMC with a recent acquisition and strong AUM growth, which is wonderful. It says it's led by experienced fund managers, Manish Gunwani. So we'll get to know about that a little more. But it's passing our initial filter, right? Credible and experienced fund manager. That's what we're looking for. To get into the specifics of it, right, it gives us some history. So Bandhan Mutual Fund, formerly called as IDFC Mutual Fund, was set up in 2000. And in 2022, April, it went through changes, which then became IDFC, then they got rebranded as Bandhan Mutual Fund. And it's amongst now the top players, it says, in India's mutual fund space. So there you go, it's managing a lot of money. Then it has no significant controversies in the past 5 years, which is wonderful. That just means they're doing everything that is above ground, legal. There are no compliance issues. And then with regards to fund managers, right? Because in the Bandhan Small Cap, there would be a team of fund managers, potentially 1 or 2 main fund managers and their team that picks the stocks that end up becoming a part of the portfolio. So here we have Manish Gunwani, who is the fund manager. There are 2 of them, but we will especially look at Manish Gunwani here, who previously headed equities at Nippon India Mutual Fund and ICICI Prudential Mutual Fund, which is wonderful, right? Because these are 2 big names. He was heading equities there, and when the entire management changed, right, from IDFC to Bandhan, he was hired then and has been managing the fund since then. Over 28 years of experience, which is wonderful. And you know what? You can go through the exact details at your own pace. But so far, this fund is winning for us with respect to the F. One thing that I want you to consider, and this will come in handy later on, is the approach, the investing style. So just keep this in mind. It adopts a diversified, growth-oriented strategy focused on identifying hidden gems amongst Indian small caps. And it holds over 150 stocks, right, which is more than its competitors. We'll get to that, why this is relevant, but just remember that. Also remember, this is a pure small cap fund, which means you're investing in companies that are ranked between 251st and 500th in the Indian stock market universe by market cap. Now, these are amongst the smallest publicly listed companies in India, and that comes with both massive opportunity and also significant risk. So your investment horizon, if you're investing in small cap funds, including the Bandhan Small Cap, should be at least 7 to 8 years, but honestly, even 10 plus years would be better. Then comes L for long-term returns. We want to look at longer term returns because anyone can get lucky with 1 year of good performance. And for that, ideally, we want to specifically look at rolling returns as they show you the real story, because they measure performance across different time periods and not just one starting point and one ending point. Because in this case, right, when you're looking at CAGR or annualized returns, if you're looking at one starting point, one ending point, even if the fund does very well at the very end, the returns suddenly go up. With rolling returns, you're looking at consistency of returns. So here you go. Let's look at the returns of Bandhan Small Cap against the Nifty Small Cap Index. Now, one thing is very clear here, right? Bandhan Small Cap only was launched in 2020, which means that the rolling return data is not very vast. Because if you're looking at 3-year rolling returns, ideally we should look at 5-year rolling returns. Then it gives you a good expanse, right? Because if the fund is 10 years old and if you're looking at 5-year returns, 5-year rolling returns, it gives you a long history. But in this case, because that is not really possible, because it's just been around for 5 years, which is a considerable amount of time, but not long enough for our research, it doesn't tell you the full story. So for example, here you would notice that the Bandhan Small Cap on a 3-year rolling basis was lagging the small cap index up until about 2024 March. And since then, it has performed much better. Now, that's why for funds that are less than 10 years old, I wouldn't really recommend looking at rolling returns. The fund ideally has to be at least 5 years old. If it's 5 years old, it becomes an option to even invest. Anything less than that, we don't want to touch that because there are better alternatives available. But in this case, right, what do you do? In that case, you want to look at calendar year returns. So in 2020, how it did, 2021, 2022, and so on, right, against the benchmark and against its competitors. So I will go to Money Control for this. I'm on Money Control. I just typed in the fund name in this search box and now I come on this page. I quickly want to go to returns. The moment I go to returns, I want to scroll down and look at quarterly results, because here is where I will get the annual performance. So it is this fund here in this column and it is the category average. I don't want to look at Nifty 50 here because that's not the right benchmark, right? Nifty 50 is for large caps. This fund is a small cap fund. So we want to look at category average if the benchmark, which is the BSE 250 small cap index, which is not available here, we want to look at the category average. So ideally, in such a case, you want your fund to beat the category average at least 4 out of 5 years, right? So there we go. In this case, if you notice category average, it's beating it. 2021, I would say the performance is very similar. 2020, it beat. In 2022, it did not beat. It was better in 2023. 2024 and 2025. So it's been better across all these periods except for that 1 year in 2022 when it underperformed the category average by about 5 to 6%. But apart from that, right, very good solid performance, and that's why it's ranking amongst the best small cap mutual funds in India. So if I can show that to you, so there you go, right? If I just compare performance on an annualized basis, knowing that it has consistently beaten the category average across the last almost 6 years now, there you go, right? Ranked second, first, and third. So it's a topper in terms of performance. But one thing that you should be careful about in this case, if you've been a friend of the channel, if you've been watching my channel for a while, you already know that generally funds that have done well in the past 3 years don't tend to perform well in the subsequent 3 years. So only 25% of top performers continue to be top performers. This is Funds India study. So keeping that in mind, you want to align yourself, because this fund has done well, with expectations. So you should not expect it to continue to do well, and you should have the capacity to stay invested in it because it's small cap for between, again, 7 to 10 years, right? So anyway, if the fund doesn't perform well in the next 3 years, you know that that is just regular market behavior. But as things exist right now, it is a good performing fund so far when we are on L for long-term returns. Now let's move on to A for allocation and approach. This is where we understand how your money is being put to work when you invest in the Bandhan Small Cap. So here we want to focus on the style of investing. And earlier we found the best way to analyze this was again by using AI. I'll quickly go back to that particular finding. The approach, I asked you to keep that in mind. was growth oriented, identifying hidden gems, plus has a large amount of stocks in it, right? 150 plus stocks in this particular mutual fund. So if you are investing in one more small cap fund, and we'll get to this in the final part of Edge, there are certain things that you want to keep in mind. So here we go, we are on ticker tape, and I'm looking at the Bandhan Small Cap Fund, where we'll get more analysis of where it actually invests. Look at that, right? It's investing about 83% in equities. It has 16.5-17% in cash, which is money that is not yet invested. And you would notice here, right, that if we just go to the holdings of the portfolio, you'd notice multiple things, right? That because it has so many stocks, it is investing small amounts in different small cap stocks. So you have Sobha, you have LT Foods, you have South Indian Bank, and so on. You can keep going through this entire list, and you will get exactly how much money gets invested in which stock. Now in this case, we just want to know the investing style, which is growth oriented but finding hidden gems, plus investing in a large number of stocks. That seems to be the theme. Now, this is kind of connected to point number H or factor number H in the Flash framework. So keep that in mind, and we'll come to it as to how it fits later. Then let's move on to S for stress and stability. This is all about how your fund behaves when the markets are moving either wildly, right, up or down. And for that, I'm specifically going to look at capture ratios, which measure how your fund does when the markets are doing well and how when the markets don't do well. There are two specific subtypes within capture ratios: up market capture ratio and down market capture ratio. So let's say the small cap index or the benchmark moves by 10% up, but your fund moves by 15%. Then your up market capture ratio is 15% divided by 10%, which is 150. Similarly, if the small cap index drops by 10% and your fund drops by only 8%, then your down market capture ratio is minus 8% divided by minus 10%, which is 80%. So ideally, if you think about it, you want the up market capture ratio to be as high as possible and the down market capture ratio to be as low as possible. So that way, the total capture ratio, the higher the number, the better. This sounds complicated, I know, but you don't have to sit around and calculate this on your own. There are websites that help you do this. One such website is Advisor Coach, my go-to website for finding and just knowing capture ratios. So I've just entered equity small cap. Within it, again, the link to it is available for free in the description. And I've entered the top 5 performing small cap mutual funds in India. I'm looking at 3-year capture ratios, and it tells you right away, right, what the up market capture ratio is, what the down market capture ratio is. So for the Bandhan small cap, you will see that the up market capture ratio is the highest, over 100, right, which is fantastic. And the down market capture ratio is actually the lowest at 74, which means the overall is somewhere middling, right? It's number 3 out of 5. But I am not too concerned about it. The entire idea of looking at capture ratios is to figure out if it's too highly skewed in one direction. Because if it's very bad, right, if the down market capture ratio, let's say, was over 100 or over 90, then you are more likely to panic when the market is going down and more likely to sell. At the same time, if the up market capture ratio for a small cap fund was, say, lower than 70, right, then when the markets are going up, you are likely to feel like you're missing out on returns because you see others around you get higher returns with small caps. You are more likely to sell your mutual fund. Just to get a better perspective, let's look at 5-year capture ratios as well. And I just press submit, and now let's see how that looks like, right? So in the Bandhan small cap, if you think about it, it's the lowest. The total capture ratio is the lowest for this. The rest are pretty similar. Here you'd see that the up market capture ratio is very close to 100. The down market is around 78. If you notice the Quant small cap, right, or if you notice Franklin smaller companies or Nippon India small cap, I think their capture ratios look even better. But again, remember, you don't want to look at capture ratios independently. They should be looked at as a part of the collective whole. Which brings me to finally Edge for how it fits your portfolio. Now, this is where I see most people messing up. They focus so much on whether a fund is good or bad that they forget to ask whether it fits their portfolio, their investment style, their goals. So if you're building a diversified equity portfolio for long-term goals over 7+ years, small caps should typically make up anywhere between 15 to 30% of your total allocation, depending on your risk tolerance. Again, there are some people who have got a very high risk tolerance there. A higher amount can also just be justified. At the same time, some people have a lower risk tolerance. So even a 5-10% allocation could be a good idea. But then if you're looking at investing in this particular fund, it could form a part of your small cap allocation. So the Bandhan Small Cap invests, remember, in over 150 stocks. So if you're pairing it up with one more small cap mutual fund in your portfolio to get your small cap exposure, remember to check the overlap. That means if the second small cap fund that you're investing in, if it invests in the same stocks that Bandhan Small Cap invests in. Just to give you an idea, here's the value research page of the Bandhan Small Cap Mutual Fund. I go to portfolio and you will see right now it's 184 stocks, the exposure. So you want to check the overlap, and to find overlap, I'm on One Finance's mutual fund overlap tool. Once again, the link to it is available in the description. I'll just enter the two fund names. In fact, I can add one more fund. So let's add one more fund. Let's say Quant Small Cap. Right? These are some of the funds that showed up with a very high score in the capture ratio category. So I'm just selected these randomly. So there you go, right? The Bandhan Small Cap has a 14% overlap with Nippon India Small Cap. It all has an 8% overlap with Quant Small Cap. So very low overlaps, right? So these could be potentially the two funds, just as an example that you can include if you want two fund exposure in the small cap space and you don't want the funds to invest in the same stocks. So always check the overlap and how it fits your portfolio. Remember, at least minimum 7-year goal, if not a 10+ year goal, which is fantastic because then you reduce the odds of getting low returns or even negative returns with small caps. So there you go. If this analysis has helped you understand mutual fund selection process better, let me know in the comments and drop the name of any other mutual fund that you want me to analyze and I will put the flash on it. If you enjoyed this video, then watch this one where I talk about how you can invest according to your salary, what kind of investment plan you could have, and I will see you in the next one.